I'm surprised at how quickly the market has come back. However, we have a market that wants to go up. We are, as a people, and I hate to get theoretical on this, but it's okay every once in a while. People do want to see things better. And I think whether it's the analysts, whether it's companies, expectations were very, very low if they were given at all. And I think the fact that we've seen a little bit of a glimmer of hope, these markets wanted to see that. And I think we're going to continue to see that rise as we move forward. If people can put masks on, we might come out of this even faster on the economic front. But right now, the markets are looking 12 months ahead, and they're saying we do see ourselves coming out of this. And we're seeing that with the rise here in the S&P and the market overall.
I think that notion of people being optimistic and wanting to be optimistic, you want to be optimistic that convalescent plasma will work, especially now that it's approved for a broader swath of patients. You want to be optimistic that an AstraZeneca Oxford vaccine could be fast-tracked for use by the fall here, Jenny. At the same time, you know, you take a look at valuations, and can you get behind this market?
I can't. I could, even last week I could, but at this point I can't get behind it. And I'll tell you what really has me unnerved in the last week or so is the fact that Apple and Tesla have run up as much as they have following their share splits, because their stock splits, because that doesn't add any value to anything. All it does is change the psychology. And I would say I haven't seen huge echoes of 98, 99 until this. And this is making me nervous. So I look at that and I think that it's illogical that Apple would be up 30% just on a stock split. It reminds me of back then. And then I look at something else, which is we've got now FANG and Microsoft, right? So the six. We've got them making up 27% almost of the S&P 500. Meanwhile, their earnings only make up 14% of the S&P 500, and their revenues make up 1.5%. So I see a huge disconnect there. So I'm comfortable staying invested. I'm comfortable being in my stocks. I am not comfortable in the broader market, and I'm not comfortable with the multiple that we're trading at.
Comfortable staying invested, comfortable staying in your stocks. I mean, effectively, you are bullish on the market. I mean, holding your position is effectively a buy, right?
Yes, but I don't own that top part of the market. So I've really underperformed. So I don't own the S&P 500. I own something that would be closer to the equal-weighted S&P 500 or the Russell 2000. That's more where I am.
Joe, it's tough to be a portfolio manager out there and not be in the top 5 stocks in the S&P 500 if you want to meet your benchmark.
Yes, and I think it's also tough to be a portfolio manager as you look forward to the month of September and the end of 2020, and to try and think logically that we are overconcentrated, that there is an overvaluation. Because if you go through that very thoughtful and logical exercise, what you'll find yourself doing is taking off risk in an environment where clearly risk on is the proper way to be. And with that in mind, you'll fall behind as it relates to the year's end performance. So I think it's very...
I think we've lost Joe. So Doc, I'll kick it over to you. Same question there. Hard to be out of these stocks when these stocks are driving the overall market.
Yeah, Melissa, and I think it was about a week ago that Jim Cramer talked about the splits that were upcoming, the 4-for-1 and the 5-for-1, Apple and Tesla. And one of the beneficiaries that I talked about back then was, of course, the exchanges where these stocks and options are traded, Melissa, as well as the Options Clearing Corp. And no greater evidence of that, that risk-off sort of feel, even though you want to participate, than the fact that the options have tripled in Apple. I mean, we were averaging 750,000 options a day in early August for Apple, Melissa. Now, on Friday, we almost traded 2.2 million options on Friday alone. Then you look at Tesla, it's a similar sort of thing. It's smaller numbers, 330,000, and they jumped to over 700,000. But obviously the reason, at least in my mind, Melissa, for both of those seeing a big surge in options is people aren't that comfortable buying a $2,000 stock like Tesla, but they're fine putting on a limited risk trade in the options, especially ahead of that 5-for-1 split in Tesla.
So your interpretation your interpretation of this increased activity is that people are actually getting into these stocks at this point, or is this a stock replacement strategy? Is this a hedge against a holding right now?
I think it's all three. Because you're such a maven in the markets, Melissa, you know exactly the right question to ask, and that is it. It is hedging. It is stock replacement, as you say, people getting out of those stocks and replacing the long exposure with the options. And to a certain extent, there are new positions, people that haven't been in these, that have said, you know what, I really can't even afford a round lot, 100 shares of these stocks, and yes, you can buy fractional, but if I'm in these options, and the options, of course, will give you that same 4-for-1 or 5-for-1 exposure after these splits happen, Melissa, I think that's going to be exactly why the folks at Robinhood, the folks at E-Trade, and any of the do-it-yourself or DIY brokerage houses are seeing such a surge in those two stocks in particular, but it's not limited to those. It's across the board. But because of the stock splits, that's why there's added focus on these, Melissa.